Hi guys and welcome back to the Mindful Investing channel. Today I want to talk with you about Tencent. First of all, what is Tencent? Tencent is a Chinese technology holding company which owns many highly innovative companies. For example, they own WeChat, which basically is a more advanced version of WhatsApp. And Tencent currently is also China's most valuable company. Before we dive any further into Tencent, let me give you a short overview of today's program. We will begin with a valuation for Tencent. After this valuation, we will look at a way to acquire Tencent shares at a discount through Prosus, which basically is a venture capital technology investment company headquartered in the Netherlands. Lastly, we will look at a way to open a position in Prosus using put options. So let's begin with a valuation for Tencent. As always, we will value Tencent using a very simple discounted cash flow model. To be able to value Tencent using this DCF, we have to first make a couple of assumptions. First, we have to assume Tencent's future free cash flow growth rate. The growth rate is basically divided into two parts. So basically the first period is the next 5 years and the second period is the 5 years following those 5 years. To come up with the future growth rate for Tencent's free cash flows, I always like to look at their historical free cash flow growth rates. So let's look at Tencent's historical free cash flow and calculate their 5-year compounded annual growth rate. Over the last 5 years, Tencent's free cash flow growth rate was 29.2%. Because there was quite a high spike in free cash flow in 2020, and because I always like to be conservative, I only entered a next 5-year growth rate of 18% and a growth rate for the 5 years following those 5 years of 15%. Always remember that it's better to be surprised to the upside. We have to assume Tencent's end multiple. So basically their price to free cash flow multiple at the end of the 10-year holding period. During the last 5 years, Tencent's price to free cash flow multiple was in the range from 34 to 46. Because it's likely that future growth rates for Tencent will decrease and therefore also their multiple will decrease, and because I always like to be conservative, I only calculated with a multiple of 30. To be honest, even a price to free cash flow multiple of 30 seems to be quite high. But because Tencent will probably grow quite fast and because the multiple only has a minor impact on the fair value calculated with this DCF, because our discount rate will be quite high, I still calculated with a multiple of 30. Last, we have to assume Tencent's future buyback yield. To assume Tencent's buyback yield, I personally also like to look at their historical buyback yield. So let's look at Tencent's annual shares outstanding over the last couple of years. As you can see, Tencent did not buy back any shares. In fact, they even issued new shares and diluted their shareholders. This dilution of the shareholders has to be factored into our DCF in our buyback yield assumption. So let's calculate the buyback yield for Tencent. When calculating Tencent's buyback yield based on the last 5 years, we come up with a value of 0.51%. The value is positive, which means that Tencent basically issues 0.51% new shares each year, based on the last 5 periods. To be conservative, I assumed a future buyback yield of 1%. Therefore, because the buyback yield is positive, a dilution of 1% per year. So now we are done with our assumptions and can finally calculate a discount rate, which basically is our internal rate of return for Tencent for the next 10 years. To come up with a discount rate based on our assumptions, we simply adjust the discount rate until the fair value of the stock given in our DCF is equal to the current stock price of the Tencent stock. So the promised internal rate of return for Tencent for the next 10 years based on our assumptions is around 24.5%. So now let's continue with our second part of this video and look at how to acquire Tencent through Prosus. So first of all, what is Prosus? Prosus is a technology investment company, basically venture capital investment company, which was spun off from Naspers, which has been an early investor in Tencent and currently owns a stake of around 28% in Tencent. So let's have a quick look at Prosus' investment portfolio. As you can see, they own stakes in many interesting companies and also publicly listed companies like Delivery Hero, Stack Overflow, Tencent, and many more. To calculate a potential discount to their net asset value, we have to first calculate the value of their investment portfolio. Because I'm lazy and because it's also really hard to value privately owned companies, I only valued Prosus investments into publicly listed companies. As you can see, their biggest and most valuable investment is in Tencent, which currently sits at a stake of 28.8% and a value of around $153 billion. But their investments in other publicly listed companies are also quite valuable. Feel free to pause the video and look at all their stakes. So the total value of Prosus investments into publicly listed companies is around $162 billion. To calculate Prosus discount to net asset value, we have to also factor in Prosus market cap and their net debt. So now, when calculating a discount to their net asset value, we see that Prosus trades actually at a premium to their investment portfolio's value. But we have to always keep in mind that we have only looked at Prosus publicly listed investments. So if we factor in some of Prosus privately owned investments, for example Stack Overflow, which is valued around $2 billion, you will see that they're actually trading at a discount to their net asset value. I will leave a link to a Seeking Alpha article in the description where somebody tried to value their privately owned investments. So basically, when buying Prosus, you get a big Tencent stake and many other investments basically for free on top. Finally, let's have a look at how to enter a Prosus position using put options. So let's have a look at Prosus option chain. As you can see, the February 18th 72 strike price put is currently trading somewhere in the range from €3.84 to €4.01. So let's assume that you'll be able to receive a premium of around €4 when selling this 72 strike price put. To calculate your cost basis when entering a Prosus position using this put, you simply deduct the €4 in premium you received from the €72 strike price. Your cost basis per Prosus share will therefore be €68, which is a discount of about 5% to the current stock price. In case Prosus stock trades above the €72 strike price at expiration, you have to calculate your cash-on-cash return. To calculate your return, you simply divide the premium you received by your strike price less the premium you received, because you have to always remember that you received the premium upfront. So the actual amount of cash you have to set aside to enter this position is only 68. Basically, the strike price less the premium. Your cash-on-cash return will therefore be around 5.8%. As you can see, using put options in a high volatility environment enables you to either achieve high returns in your cash or to enter a stock position at a big discount. So that's it for today's video about Tencent. Don't forget to leave a like if you enjoyed the video and feel free to ask any questions in the comment section. See you next time.